Hi, this is James Shug with Westpac London's end of day report for Wednesday the 31st of October, last day of October. US markets back today, they're lower. I think concern about the impact of Hurricane Sandy and the damage that has been wrought would certainly be a factor driving investor sentiment. Although the data released today wasn't particularly flash either, the Chicago PMI held below 50 for the second month running. I mean, the last time it did that was in the closing days of the 2009 recession, and prior to that it was under 50 just as the economy was heading into recession. So a bit of a recessionary signal there from Chicago, although I don't think the US economy is in recession at the moment. The Milwaukee PMI was even weaker, fell from 47.1 to 43.3. It's been under 50 for 4 months running now. And its orders, production and jobs components were all in contractionary territory. That contrasts with Chicago. Orders, jobs and production there were just above 50. So although the overall index implied a very mild contraction, those components still managed very meagre growth. The employment cost index for the third quarter was very soft at just 0.4%, down from 0.5 in the previous quarter. Benefits costs did grow, but wages and salaries growth actually decelerated from 0.4% to 0.3%. Canadian GDP, the monthly figures, August showed only the second decline for the year so far, although that was based on mining. There was a mining shutdowns through the summer seemed to be the main factor behind that. In Europe we had decelerating inflation. The flash estimate for October came in at 2.5%, down from 2.7%. The reason it spiked a few months ago was because of Spanish tax increases related to budget austerity there, and also energy prices, but that's unwinding now, although not completely yet. Unemployment rose further in Europe, or Euroland, from 11.5 to a new record of 11.6%. Just to give you some numbers, national rates ranged from 4% in Austria to 26% in Spain. Youth unemployment, in Greece is on 25, but the latest figures there are for July. These are September figures I'm giving you. Youth unemployment is 23% right across the Eurozone, ranging from 8 in Germany to 54 and 56% in Spain and Greece respectively. So more than half of the people under the age of 25 can't get a job in those countries. German retail sales jumped 1.5% in September. Now the iPhone 5 came on sale 21st of September in Germany, but it actually says here that IT sales were down. It was clothing and food that lifted the figure. So that was a surprising sign of strength in the German retail sector. Consumers do seem to occasionally spend in that part of the world. And UK consumer confidence, it was down from -28 to -30 in October. That's its weakest since April. So that was the data that was released today. The markets at the European close, we saw the FTSE down 1.2%, the French market down 0.9%, the Germans, they're off 1/3%. Spain and Italy both managed 0.1% gains today. And the Dow, as I'm speaking, it's at 13,066. That's down 40 points, or about 1/3%, halfway through the session there. Commodity markets, we've got, let's see, copper prices up 0.4% today, gold up 0.75% at $1,725 an ounce, and oil at $86.36 a barrel is up 0.8%. The Aussie dollar, it hasn't moved around too much. It's at 1.038 against the US dollar, just up a tiny bit from yesterday. We get export and import price data out today, and also figures on house prices, a private sector survey there. Okay, that's it for today. More US data coming tomorrow, including the delayed Conference Board Confidence Index, the ADP Private Sector Payrolls Report, and others, and including jobless claims, and then of course on Friday it's the official payrolls figures. On payrolls, we're looking for a 30,000 increase, a very weak gain. I might explain more about that tomorrow. And for the ISM manufacturing survey, which is also out tomorrow, we're looking for a sub 50 result there. And I've got to say, the regional surveys we saw today from Chicago and Milwaukee, on top of the Fed regional surveys, are all pointing in that sort of weak direction. Okay, I'll be back with more tomorrow.